The first target was hit on this bar right at 6,800. That was on last Friday, but showing a rejection tail. Yesterday have another attempt to rally. We could use an analog based on the past. We have a consolidation right here and also another consolidation here. This will be another consolidation similar to the past. This is 1, 2, and that's 3. A third reaction here compared to reaction 2 and reaction 1 is small, and reaction 1, if we check out the magnitude, that's the magnitude, that's also the magnitude. Look at this third one. The magnitude here is a lot less. I don't think it will get chopped around like 2 because in terms of the supply level, look at reaction 2. There's a lot of the supply coming out, and that is by far the largest 2 bearish bar that we have ever seen. Reaction 1 and reaction 3 have similar supply level. That's the supply level, and here is the supply level, and slightly lesser. The third reaction is not as bearish as 2 and also lesser than 1, suggesting that we won't have a long duration of the consolidation like this. Take a look at this. This is a consolidation. Again, this is another consolidation. Here, we could have another pullback, building another handle, chop around, but it will be a lot shorter duration compared to reaction 1 and reaction 2 before it break out. Judging on the magnitude to the downside, this is by far the shallow pullback, and judging the supply level, this is also not much supply compared to 1 and 2. Even we get a consolidation or pullback, it won't be as long as first and second consolidation. That's why this will be a similar analog compared to the past. You could also use simple MA. For example, look at this MA20. The only time that it's closed below MA20 is reaction 2. We have this temporary close below, chop around testing. Here is as a support. Here, there's a fair bit of the distance from the MA20, suggests there's strength in the current movement. As long as it's still above MA20, the trend is going up until we get a close below and then inability to rally and then failure. This will be coming to an end and going to some major consolidation, still going strong despite quite a lot of the chart are extended based on the movement from the past. There is a test and followed by a breakout, but there is some rejection shown up here. The supply came in on bar 1 and bar 2. That is volume 1 and also volume 2. Profit taking, but no follow through to the downside as confirmed yesterday. We would want to see further commitment above. If you could still commit above the axis line or even get pullback, chop around here, that will be very bullish. Another scenario could be a pullback to about 6,700. This is considered as a minor support level since the bullish harmony here and also tested the gap support, this demand tail, tested the 6,700 level. If we do get another pullback, this will be the first line of the defense at 700 to build up the handle. Either way, I'm still looking forward for more upside, like 6,900, 7,000, until we have excessive supply coming out and also excessive bearish price action, bearish engulfing bar, big bearish bar. Look at the volatility, all this small candle, whereas the upside candle, downside candle, it's all small candle. The only spike of the volatility we have is here. That's the reaction 2 where we have spike of the supply. This is manageable volatility. That's also encouraging and constructive. If we didn't get a pullback, then it could still keep pushing up until we hit some localized short-term climax and maybe pullback, consolidation. That is like a lockout rally without a meaningful pullback. So far, look at all this pullback is considered as shallow without any meaningful pullback, and it could still keep grinding, going up until it met with excessive supply. First level of defense, 6,700. As long as 6,700 is holding up, it's likely going to go up, test 6,900, 7,000.